It's no secret that hedge fund investors make tons of money, but what exactly do they do all day? Today, we're going to be going through a day in the life of a hedge fund analyst from two perspectives. A good day when it's not earnings season and there's not too much fluctuation in the portfolio, and then a bad day during the heart of earnings season when things are extremely hectic, urgent, and it seems like the financial world is just on fire. Before getting started, if you're new here, my name is Ben and I used to work at JP Morgan as an investment banking analyst. And while I haven't worked at a hedge fund myself, I spoke with my friends who do to create this video, and I'm going to be speaking in the first person to make everything easier to follow. With that said, let's get started with a good day at a hedge fund. The day starts when I get to the office at around 7 a.m. and I first check my emails to make sure I haven't missed anything overnight. One thing to note about my schedule is that my day starts earlier than in private equity or investment banking because I need to be in the office well before the markets open at 9:30 a.m. Eastern so that I'm ready for any movement. After emails, I'll catch up on financial news and then dive into company-specific reading on a stock that my PM asked me to look at, PM Portfolio Manager. I need to analyze whether it's a good short or long opportunity, and so I'll usually start with news on the company as well as reading quarterly and annual filings and reading at least the 5 to 10 of the past earnings transcripts. The market opens at 9:30 a.m., but pre-market trading can happen as early as 4 a.m. And so I'll go on Bloomberg to track what has happened to the stocks I cover in my portfolio. And if there has been a big movement in one or some of my stocks, I'll direct my attention to following up and trying to understand what caused the movement. I'll look to see if there are any press releases from the company itself or if there are any equity research reports recently published. If nothing significant has happened, I'll continue analyzing the new stock that my PM assigned me. I'll use the news and reports that I read in the morning before the markets opened to build out the key drivers and assumptions in my financial model. At noon, I'll take a lunch break for about 30 minutes. Sometimes I'll grab lunch with coworkers, but often a lot of analysts still have lunch at their desks in order to maximize time online while the markets are still open. After lunch, I'll spend the rest of the day on my ongoing work, which entails one of four things. First is reading, so much reading. Hedge fund analysts do a ton of reading, be it the news, quarterly and annual reports, equity research reports, industry reports, earnings transcripts, and a whole lot more. I need to read everything I can so that I understand the bearish versus bullish views on a stock. Second is financial modeling. From the research and people I speak with, I'll update my model with any new assumptions. And once I have a view on the stock, I'll set a meeting with my manager, maybe once every 2 to 3 days to discuss. Third is generating new investment ideas. This is more and more important as you gain more experience at a hedge fund, and I'll typically look for ideas within my scope of companies I cover, and this depends on your firm's strategy as well and your role. For example, I could be a healthcare specialist, or I could cover mid or large cap companies only in Asia or North America, so it really just depends. Fourth are meetings. Every so often, I'll take calls or meet with management teams, equity research analysts, and industry experts to better understand the companies I cover in order to get not insider info, but certainly the inside scoop in the hopes of generating alpha. At 4 p.m., the market closes and I'll check to see if there are any news updates such as M&A transactions, partnership launches, or product launches. Otherwise, I'll just keep on reading, work on my model, or think of new investment ideas. Between 7 and 8 p.m., my coworkers are all starting to trickle out of the office, and so the rest of the evening I can just pretty much have to myself. Now, if you're watching this video because you're fascinated by the world of investing, you may want to check out the Applied Value Investing Certificate program being offered by Wall Street Prep and Wharton, which is where I got my MBA. This program teaches you how to apply the principles of value investing with the sophistication of an institutional investor, and you'll be taught by Wharton professors and legit keynote speakers, including legendary Oaktree co-founder Howard Marks. Through this 8-week-long program, you'll learn about the core concepts behind value investing, such as market efficiency, intrinsic value, process-driven value investing, and a whole lot more. And so whether you're an individual investor or a student trying to break into hedge funds, this program will give you the fundamental knowledge you need to invest like the father of value investing himself, Warren Buffett. And so if any of this is of interest to you, be sure to use my code rareliquid to get up to $500 off, and I'll leave information for everything I just discussed in this video's description. All right, let's now go into a bad, aka super busy day at a hedge fund. Busy days will typically occur during quarterly earnings seasons, which go on for about 1 month, 4 times a year, when the vast majority of companies report their earnings. How busy a hedge fund analyst will get really depends on the strategy of their fund. And so, for example, some funds will assign each analyst to cover only 2 companies, while other funds will have analysts cover over 30 companies. During earnings season, news, reports, earnings calls, and etc. are just all coming out non-stop, like when it's the playoffs for sports. And so there's an insane amount of news coverage and things that you need to pay attention to. And companies report earnings either before the market opens from 7 a.m. to 9:30 a.m. or after the market closes from 4 p.m. to 6 p.m. and you need to be on all of those calls for the companies that you're covering. As a result, on a busy day, I'll get into the office by 6 a.m. to read the news, get market updates, go through equity research reports, and digest any press releases or financials that the companies I'm covering have released ahead of their earnings calls. Earnings calls take anywhere from 30 to 60 minutes, and there are times when I'll have these back to back to back. And during these calls, I'll be just furiously writing notes about management's prepared comments and the Q&A section so I can later on update my model and work on an internal memo to update my team about the companies that I'm covering. Now, in between these calls, I'll also go onto Bloomberg to track movements in my portfolio, and I'll direct my attention to understanding what caused the biggest movements by reading the news and updating my model with the latest assumptions. After the market opens at 9:30, I'll just be scrambling to try and stay up to date on all the updates coming from the companies. For the most part, I'll be reviewing 4 things, including any financials released by the company, quarterly filings and press releases, earnings call transcripts, and equity research reports to get the street's view on the latest earnings. As an important note, even if I'm covering a small number of companies, it's still extremely important to know how competitors are doing as well. So there's pretty much an endless amount of information flowing that I need to soak in. Based on all this analysis, I'll start to also form a view of whether or not we should be increasing or decreasing our long and short positions for each company I cover. And I'll share my opinion with my portfolio manager, who will ask me questions and execute on any necessary trades. At 1 p.m. and until the market closes at 4, I'll grab a super quick lunch and eat it at my desk as I work through going through all the materials, updating my models, going on calls with sell-side equity research analysts, and checking in constantly with my portfolio manager. I also need to start preparing for round 2 of earnings calls, which usually happens around 4 p.m. to 6 p.m. after the market closes. By 4 p.m., I've already been working for 10 hours, so I'm tired, but I still need to stay sharp for the next round of earnings calls. During these calls, if something super unexpected has happened, such as the announcement of an M&A deal, I might have to stay anywhere from 9 p.m. to midnight to try to understand what's going on and update my model. In addition, if the latest earnings makes me think one of the stocks I'm covering is a strong buy or sell, I'll have to put together a memo and discuss with my PM on whether or not we want to take action, either now in aftermarket trading or tomorrow when the market opens. While this has been an exhausting day, the great thing about working at a hedge fund is never having to waste time on formatting and making things look really pretty in PowerPoint or Excel. At hedge funds, everything is about the value I'm sharing because the markets move so quickly and are so volatile, you could easily lose millions of dollars if you're just focused on aligning your logos for a few hours or something like that. So anyway, my portfolio manager and I decide our game plan, and after spending about an hour prepping for tomorrow, I head home anywhere from 9 p.m. to midnight and get ready to do pretty much the same thing tomorrow. One important thing I want to mention is that there is no typical day at a hedge fund, and there is so much variety depending on your role and the fund's overall strategy. But I hope this gave you a glimpse into what these investors actually do. Also, if you're watching this video because you're trying to eventually break into a hedge fund, you're likely first going to have to break into investment banking. And on that note, I've been working on my own how to get into investment banking course and giving out 50% discounts for those who sign up early. I think it's going to be a huge, great resource that's going to be very affordable for those interested in banking. Feel free to check out all of this in this video's description if you're interested. In the next screen, you're going to see a video about the buy-side industries and my comparison amongst the three. Feel free to check that video out if that's of interest to you as well. With that said, thank you all so much for watching as usual. Hope to catch you all in the next video. Thanks guys, and peace.